With back to work or back to school budgeting, there probably are some added expenses in your life lately, and you may be making ends meet, putting those backpack purchases, the new shoes, on your credit card. If you do and have been, you're far from alone. There's a new study out this morning from Equifax that says Canadians are spending a lot more on credit. And Scott is here for us this morning. Nice to see you, Scott.
Nice to see you, Heather. Welcome back. Yeah, more purchases going directly on our credit cards as a result. Our balances are going up. Our spending is going up. We're applying for these credit cards at record rates. But let's take a look at the non-mortgage debt, because this is creeping up as we're putting more and more credit on our credit cards and less paying them back. That's according to Equifax this morning. Let's take a look at some of the numbers that are out just this morning for the average non-mortgage debt. This is what we're spending perhaps on car loans and on our credit cards and loading down perhaps even groceries and backpacks, as you suggested. $21,128 is the average debt per Canadian out there, and this is not anything to do with mortgages. Now, credit card balances are at the highest level that they've been since pre-pandemic levels as well. Government money, according to the study, came to help, or it would have been a lot worse. Limits as well is interesting, that banks are offering now on average about a $5,800 limit. That's the highest it's been in 7 years, and we are spending and the applications are both rising there. This study is also taking a look at mortgage debt as well, and with the housing market and some of the prices softening, there's still a demand for houses and there's still a lot of money out there. If the average loan, for example, for a new mortgage is $367,000, it's an even higher for first-time home buyers at $431,000. That's despite a lot of softening of prices anyways across Canada that's happened. But there is one bright light in this study, and that is that delinquency rates, that people still have the ability to pay down this debt and are not finding them, they're defaulting at all. So people are able to carry this debt, and so that is good news. But this debt of ours continues to be applied onto credit cards, Heather.
And Scott, when you talk about mortgage rates, those are going to be affected by what we're going to be talking about tomorrow. The Bank of Canada with another interest rate decision, and the expectation is it's going to be a hefty one.
Yep, 50 basis points, perhaps 75 basis points. That could take us to 3.25% for our overnight rate, making, of course, eventually everything more expensive as far as our loans, mortgages, auto loans, credit cards, all that. So we'll be watching that very carefully.